Hi guys, Callum McLean here from Special Effects Academy, co-creator of the Trader Accelerator program. Oh, just got my computer's going by me a minute. Yeah, today we're going to be talking about backtesting. What I want to do over the course of this week is I'm trying to show you how, I'm being your trading mindset coach, but I'm showing you how you do it by doing different tricks and tactics. So obviously yesterday we created, the entry system, how we're going to get into a trade. So we wrote some rules down for it. Now the reason we write rules out for it is so that we're prepared. When we come to do the back testing, we're prepared. We've got a set of rules. What this does in regards to your mindset is, I don't know if anyone of you understand, but when we say that we're anxious or, oh, I'm suffering from anxiety, what that actually is it's just a feeling that you're getting. And what it is it's your subconscious is trying to talk to you. It's the only way it knows how. So what it's saying to you is that you're underprepared. So anxiety is just a case of being underprepared. So that's why if you become fully prepared, you won't get the anxiety. Hi Andres, thanks for joining. Can you just give me a thumbs up so make sure that you can see and hear me okay? I've got some disco things going on my screen. I don't know if you're seeing disco on yours. So today we're going to be covering the backtesting. So why is this important? Why do we do the backtesting? Obviously, in regards to your mindset, a lot of you, you might be trying to trade a system that you've been taught or you've been shown or that you've seen on YouTube or the internet, whatever. You may come to, you may have had a couple of losses and you'll come to that third trade. You see the same signal and you start to stutter. You've got this, what if it goes wrong? What if it loses again in the back of your mind? And that then, it pulls at your confidence. And then a lot of people there, that's the moment they go, and don't take the trade. And it'll be that one that goes on to win. So the reason for doing the back testing, obviously, is it builds your confidence. Because what you'll see is if you back test, I always say do a minimum of 30 trades. If you do a back test over 30 trades, what you'll see is you might have a run of 3, 4, 5 losses in a row, but then your next 15 could be winners. But you imagine if you don't do the back testing and you get those first 5 losers, what's that going to do with your mind? Well, what it does is this system just doesn't work. Whoever give me this start, they don't know what they're talking about. They don't know how to trade. And you throw that system away. And so you never get to see those 15 winners coming next. So that's the idea of the back test. And it's to give you an idea of how it may perform. Obviously, we can't guarantee. Past results can't guarantee future results. But it gives you an idea of how it might behave and how the returns you might get. So it can then give you the confidence to keep taking the trades, even if you start to get a few losers. So let's remind ourselves of the rules. He said, get it up and let me make myself a bit smaller. Take myself out of the way. Right, so when we're going long, what we're looking for is we need to have the 50 above the 100. And ideally pointing up, just like these two here. And then we're looking for 1. This would be a long extension, and then it makes a high. The market pulls back down. So that we know then is the start of the pattern. That's our number 1. So what we're looking for then is number 2 to be lower than number 1. Number 3 to be higher than number 2 but lower than number 1. Down to number 4, which is lower than 2 and 3. And then up to number 5, which is higher than 4 but doesn't necessarily have to be lower than 3. It can be equal to or a little bit over. And as soon as we start getting that pullback, so we get the 2 candles to the right, so we've got that high. Then we put our entry in 3 pips above the 5, position 5, and our stop loss 10 pips below. And then all we do is we put our target in at 1 to 1 and we let the market do its thing. And then obviously if we're looking for a short, we're looking for the 50 to be underneath the 100 EMA, pointing downwards. We're looking for the long extension, the market's made, and then it makes this low. And then it comes up to position 2, which will be higher than position 1. Comes back down, makes a low at position 3, which is lower than 2 but higher than 1. We come up to position 4, which is higher than both 2 and 3. And then we're looking for this 5. Now this has to be lower than 4, but it doesn't have to be higher than 3. It can be equal to or a little bit lower. And then what we're doing is we're anticipating 6. So we put our entry in 3 pips below 5, stop loss 10 pips above position 4, and we're going for a 1-to-1. So let's go and have a look at the charts. Right, let's have a look at EuroCAD, and let's just clear the screen of the objects. And if we scroll back to the, obviously we're backtesting, so we're looking through historical data. So we want to take the charts as far back as they'll go, and it looks like mine are getting to, still going. There we go. That's the end as far as I can go back. So it's back in July. So remember, this is a 30-minute chart, so that's plenty for us to look at. So the first thing we're looking for is the 50 either below the 100 EMA or above the 100 EMA. Obviously we're below here. Extension, we don't get a 1, 2, 3, 4, 5. So we come along. Now we're above, so we're looking for extensions below. So we're looking for a 1, 2, 3, 4, 5. So that would be, remember, we're not seeing all of this chart, we're just seeing here. So it'd be 1, 2, 3, 4, 5. So our entry would be here, and our stop loss would be down here, and then our take profit would be 1-to-1. Then if we use the cursors on the keyboard, now as soon as it takes out the stop loss, trade's invalid. And we start again. So just using the cursor to move a few at a time. Right, so now we've got the 50 below the 100. So we're looking for our extension to finish, like it could be this one. No, carries on going, carries on going. That could be the extension, 1, 2, 3, 4. No, so it's 1, possibly 2, 3. No. And remember, we're not trying to get into every move. What we're trying to do is we're trying to recognize our signal and take that trade. If we don't get our signal, we don't take the trade. We don't think of this as, oh, we've missed all of this move. It just wasn't our trade. Right, so we've got the extension. So it's 1, 1, 2, 3, 4. One, 2, 3, 4. Remember, we're still below. And now the 50's gone above the 100 EMA. So now we're looking for longs. So remember, just keep hitting the cursor, and we're looking for the end of the extension to give us our position 1. Hi David, nice of you to join. How you doing? Give me a thumbs up. Let me know you can hear me and see me all right. So at the moment we're we're still in an uptrend because the 50 is above the 100, but we're not getting that nice upward push at the moment. So we just keep hitting that cursor button until we start seeing a movement in the right direction. Again, as I was saying before, we're looking for our signal. We're not looking to try and get into every move the market makes. We just want to see our signal and take those trades. This is a possible extension. 1, 2, 3, 4, 5. So that would be our entry there. That would be our stop loss down there. And then we're looking for a 1-to-1. That might be a little bit too high. So there we go. We're looking for that 1-to-1. And then we just go on. Again, remember when we take out the stop loss, all that means is that is void. It's not a loss because we never got taken into the market. So now we can look and say, right, that's 1, 2, 3, 4. And then of course the market's changed direction. So then we come down. And we're looking for the pullback again. So we've got an extension. 1, 2, 3, 4, 5. Right, so our entry would be here, and then stop loss here, and take profit here. No, a bit further down. Take profit there. And there we have our first winner. So literally, that's all we're doing for the moment on the backtesting. So all I do is have a sheet of paper next to me, and then just write winners and losers. So that's 1 for the wins. And then we carry on. Remember, get your lines out of the way so we don't get confused. We're now on a downtrend again, so we're looking for sells. Looking for the extension for our position 1. That could be 1, 2. No, it's pushed on further again. So again, we're looking again, 1, 2. No, pushed on further. So 1, 2. 3. So 1, 2, 3, 4. 1, 2, 3, 4. 5's gone too far. One, 2, 3, 4, 5. Gone, well, yeah, it's gone a little bit too far. Broken that low there, it's already gone in effect. So then we just move on, look for the next one. Now remember, the reason you got your rules written out next to you is because otherwise what tends to happen is when you're backtesting and you see this move and you don't get in. Hi Hayden, glad to see you've made it in today. Your feed is frozen. Okay, well, hope you get that sorted out. Yeah, so the reason we write out the rules is because you can find that when you're looking at this, you see these nice moves that you're not getting into, and that can become upsetting. And what you'll try and do is you'll try and find ways of getting into that trade, you know, in the middle of your backtesting. So what then happens is you're actually changing your rules on the backtesting as you're going along. And then you get to the end of the backtesting and go, oh, brilliant, you know, you've got really good results here. But what you've actually done is you've changed the rules for nearly every trade so that you haven't, when you come to trade it, you can't. You won't get those same results. So what you've got to do is you've got to make sure you write your rules down and you stick to them. If along the way you're finding that you have spotted something else that you think would work better, don't stop and start changing in the middle of it. Complete the back test, get those results, and then if you truly believe that you've spotted something better when you was doing it, then write out the rules for that, and then go back to the very beginning and do a complete back test with your new rules. Don't ever chop and change halfway through, because you're not giving the system you're testing a proper opportunity and a proper test unless you go right the way through. So that's why I always say do a minimum of 30, get a minimum of 30 trades. If we can't get it on the one currency pair, then we'll just go on to the next currency pair, and you keep going until you get your 30 trades, because that will give you a good idea of how your system might behave going forwards. Anything less than 30 trades, I mean 30 trades is a minimum, absolute minimum. You really want 50 to 100. But I know some people struggle with backtesting. I know it wasn't one of Hayden's favourite things. And he's already written on here, why didn't you take the beautiful short? Like I said, Hayden, you don't just take anything you see. You've got to have your rules written out and take those, because that's the only way you're going to make sure that you have got a system that you're following and that your system works. If you start tweaking and chopping and changing, if it becomes that you're no longer making profit, when you go to look back and say, well, what happened? You're not going to know, because you haven't been following a stringent set of rules. That's why, I am very much a believer in write your rules out, specifically, and follow them to the letter. Because what happens then is when you review, which you should do every month or every 3 months, depending on how many trades you take, when you look back, you can actually see and check that you have been following your rules. Because I can almost guarantee you, if you start to lose money with the system, you'll probably go back and find that it's because you've been making mistakes. If you've tested a system out and you've checked it and it's profitable, 10 times out of 10, if you're not making money with it, it will be you. So that's why we've got to start out by being very strict about these things. Get the rules written down, make sure you understand them, and then back test those rules. So, you might be looking at these charts and thinking, Callum, you've missed a load of big moves there. Surely you want to find a system that gets into those. That's not what I'm trying to do. Remember, there's lots of charts. You're going to get lots of signals. Signals are like buses, they keep coming. So all we're doing is we're going to be scanning for our signal. That's what we're trying to do here. Because what you do is you then get good at that signal, you understand that signal, and it becomes mastery to you. So you don't have to think about it anymore. And then guess what? Then you can add a different signal in. So now when you're trading, you're not just looking for one signal, you've got 2 signals. But you've got to understand one first. You've got to be proficient with one first before you add in anything else. So if we go back to the back testing, just rant over, I just thought I'd get that out of the way so we know where we're at. Because I remember when I was first back testing, I would keep seeing all these brilliant moves that I wasn't getting in, and I'd be, when I'm talking about, what may happen and what should happen, it's all based on my past experience. So I was that guy. I was the one that tweaked the back test and got to the end, and I was like, wow, these results are amazing. I'm getting like 200% in a month. Wow, I'm going to be a millionaire. And of course, you go to try and trade it, and I was like, well, why am I not getting the same results? And it's because basically I was curve fitting each rule to each particular trade on the chart at the time, and just not realizing that I was changing a little thing every time. So that's why we've got to be very strict. So if we go along, we're looking for longs, and that could be 1, 2, possibly 3. No, so let's see, we go 1 again, 2, 3, possibly a 4, be a 4, could be the 5, in which case our entry would be there, and our stop loss would be there. Going from 1 to 1, probably a bit too far. Would you reckon about there? Probably put my glasses on, I'll tell you a bit later. Right, so we're taken into the trade, and we lose. So that's one winner, one loser so far. And then we could just carry on, move the lines out of the way so as not to get confused. So that could be a possible 1. And it moves on. That could be a possible 1. And it moves on. That could be a possible 1, 2, 3, 4, 5. So put your entry below the 5, stop loss above the 4. Looking for a 1 to 1. Possibly there. And then we're in the trade. Market does its thing, and it's a winner. So we're now, maybe that's a bit, we're doing 1 to 1 there. Still a winner. There we go. So that's 2 wins, 1 loss. And again, move the lines out of the way. Now I've got hundreds of lines on the chart, but not to worry. Let's put it up here actually, just add, or even delete them, because we don't need them anymore. Right, so again, we're still looking for shorts because we are bearish. Our 50 is below the 100 and it's pointing down nicely. So again, we're just looking for that number 1 on the pattern. We're still coming down. There we go. So that's possibly 1, 2, 3, 4, maybe a 5 there. Obviously, it takes out the stop loss, so it invalidates that one, because that would have been your entry, that would have been your stop loss, but that's invalidated. But don't think then that invalidates the whole trade. It just means that maybe our pattern's not right. So this could be 1, 2, 3, and this is our 4. Could be 1, 2, 3, and this is our 4. 1, 2, 1, 2, 3. This could be our 4. Market's just going sideways, and then obviously now we're above the 100, so we're looking for buys. That could be the 1, 2, 3, 4. So 1, 2, 3, 4, 4, 4, and then daughter coming in, say good morning. Hello, Luna. Yeah, just go and get ready for school. It's early morning here, in case you didn't know, in Thailand. Daughter's half asleep. She forgot I'm working in the morning. And so we're just carrying on. All we're looking for is our signal. 50's come up. It's below the 100. So we're just in a sideways pattern. You just don't want to get involved in the sideways pattern. Remember, this is called the trend tracer. We are looking for trends. So we want it to be nice trending market like we've got here. So we're back up again. 1, possibly 2, possibly 2 there, 3. 1, 2, no, 3 is too high. 1, 2, 3, no, 3, no. Keep going. It's going sideways now. Don't want to look at that. And we're looking for There we go. Now we're back into trending. We've got 1, 2, 3. No. Back in the downtrend. 1, 2, 3, 4, 5. Went a bit quickly on that one, didn't I? Yeah, so we've got 1, 2, 3, 4, 5. That would be our entry there. Stop loss would be there, possibly there. 1 to 1 would be there. So there we go. So that's 3 winners, 1 loser. So you're starting to get the hang of it. It does take time, and you are going to be, get, when you're first doing it, a little bit frustrated because they're going to be moves that you're not getting into. Remember, that happens. It's called trading. You're not going to get into every move, and to try and do so is just foolish because you will just keep going around in circles, keep trying hundreds and thousands of different systems, and you'll never get anywhere. You've got to just pick one, see that it works, start trading it, start making a profit so that you can see in your head, hold on a minute, this trading works, I can do it. So that's what you've got to try and do. This system, we're 3 to 1. And we've only done, admittedly, we've only done 4 trades, but you can see if we go through, just pick probably, I reckon, 6 currency pairs, we can get our 30. Obviously, I'm not going to sit here and bore you to tears with doing the 30 trades. I'll do that when I'm offline and get that done so I can just show you the results. Just quickly whiz through the charts, show you the entries and the stop losses and everything, just show you each winning trade. But I'll show you the 30 trades so we can see, does it actually work? Is it profitable? Is it viable? Is it worth continuing? Also, once we've seen how it performs, then we can start looking at equity management, which is obviously the next rule that we need to apply to our trading system in order to take it forward. Again, Hayden, gorgeous shorts, your system is waiting. I'm guessing you mean wasting. One day, Hayden, you might actually listen to the words I'm saying and take on board. You can't get every trade. You're not going to get every move the market makes. And to try and do so will drive you balmy. Right, so has anyone got any questions on the backtesting or why we do it? Obviously, the reason for the backtesting, it is for your mindset. It does give you confidence and it does take away anxiety. Because what you'll find when you're doing backtesting as well is it's like, I don't know if you understand or heard Tiger Woods when he's talking about golf, and he'll actually say that he has actually said that he's taken more swings in his head than he's ever taken on a golf course. And it's because they, NLP, studies, all coaching, practicing in your mind is just as good as doing the real thing. Your brain doesn't understand that that's not real. So when you're doing backtesting, you're actually doing, as long as you're following your rules and not making mistakes, you are doing good practice. This goes towards your mastery. Now, you imagine if you're sitting and waiting for these trades, how long is it going to take you to do the 30? This could take you a month. Whereas when you're backtesting, you can do those 30 trades in a day. That's 30 good practices in a day. And that's what goes towards your mastery. That's why backtesting is so important, because when you come to sit down to actually take the trades live, if you've taken trades before, those of you who are beginners may not understand this, but those of you who have taken trades, when you put your own money on the line, your heart starts to race, particularly when it's your first time of doing it, or if you're not being profitable consistently, because you've always got that thing in the back of your head, what if it loses again? Because part of your fear emotion will be that it's, it's attached to, because of the way we're brought up and the way we're taught at schools, losing makes us, tends to make us feel like a loser. And that's what you've got to try and disengage. You've got to understand that losing is all part of trading, and it is going to happen. So when you do the back testing, it will show you that, yes, you can have several losers in a row and still make money. Now, obviously, I haven't back tested this. I've got no idea. I might come back tomorrow and go, oh, this system's not going to work because, it only managed to lose 1% or something. So what I'll do is I'll do the 30 trades back testing, and then tomorrow I'm going to show you, how to create a checklist, routines, so that you know what to do and when to do it. Because I don't know about you guys, but a lot of the times when I first started trading, I'd sit in front of the charts and be like, okay, now what? I know what I'm supposed to be doing, but I still didn't know how to do it, if you know what I mean. Those of you who do, you're really going to appreciate tomorrow, because I'll show you how to do checklists, how they help you, and why, and I'll tell you again why they help with your mindset. So, quick question from Hayden here. Would you consider the number of trades taken versus trades long and short that would have been winners? Not entirely understand. Would you consider the number of trades taken versus trades long and short that would be winners? I don't go short versus long. That's not one of the characteristics I'm looking in a system. It's going to even itself out. All I want to see is that if I take 30 trades, I need it to be profitable over those 30 trades. Even if it's just, 16 wins, 14 losses, it's made 2%. Some people might be thinking, well, that's rubbish. I don't like them odds. But there's a lot of traders out there that can't make 2% a month. And those 30 trades, if our system creates 30 trades a month, and every month it's going to give us 2% winners, then we're up 2% every month at the end of the year. That's not just 24%, because of compounding, it's probably going to be 30-something%. 30-something% at the end of the year is still very good. And if you don't think it is, just remember that 95% of traders don't make anything every year. If you make 1% a year, that puts you in the top 5% of retail traders. So therefore, you just want to find something that's winning to begin with. To actually be diving into, are shorts better than longs? I think you're trying to overcomplicate it because you like complexity. Remember, we want to keep everything simple. If the system's working, if you got to the end of 30 trades and you looked and you were like, oh, hold on a minute, every short I've taken loses, every long I've taken wins. It's not going to happen, but if 90% of your longs won and 90% of your shorts lost, then yeah, don't take the shorts. But that's something you find out at the end of the back testing and when you're doing your review. So I suppose, yes, in a way, then in that case, yes, I would. I've never seen it, but, it may happen in a system. And if it does, then yeah, don't make things complicated. If it works, just taking longs, just take the longs. Some people don't like shorting. Some people don't like selling. In that case, just take the longs to begin with. Get the hang of that. Start making money doing that, and then add in. We're all trying. A lot of the thing I used to do was complexity, because I consider myself quite intelligent. I was, when somebody gave me a simple system, it was like it was hurting me. No. Trading can't be that simple, otherwise I'd already been doing it. I've been trying to do this for 4 years. It's got to be really hard if I can't do it, because I used to, grasp concepts and things very quickly. And so for me, it was hurting my head, the fact that people claimed that you can make money with simplicity. But you really can. It's just ourselves that we want to make things hard. We want to make a trading system complex. And that's another reason why traders struggle, is because in any form of business, anything in life, even learning to ride a bike, when you learnt to ride a bike, did your parents enter you in the Tour de France, give you a racing bike, chuck you on and said, right, learn to ride a bike. No, they give you a bike with 2 little stabilizing wheels on. They give you the simple first. You learn to do simple. Once you got the hang of simple, you then said, Dad, can you take the stabilizers off? I'm ready. So then you take the stabilizers off and then you're ready, and then you get, then you start cycling with that bike. When you're used to that bike, you then get your next bike. When you're used to that bike, you then think about, oh, right now I'm ready to get, a proper bike and into some competitions. And if you do well in those competitions, you may buy a more expensive bike and then think about entering bigger competitions. My point being is, why in trading do we want to come up with the most complex thing first and try and learn how to do that? There's a lot of people try and be discretionary traders when they first start trading. If you're not sure what a discretionary trader is, Google the term. It basically means that you're making decisions based on what you're seeing, either support, resistance, trend lines, whatever else. Discretionary trading is the most difficult, in my opinion. When you're starting out, be a systems trader. Something simple like this. You see a pattern, you take the trade. End of story. And you'll find that by starting with the simple and getting the hang of that, then you can start adding in once you've got the hang of your system, and then you maybe get another system, you get the hang of that. And then once you're trading them mistake-free, that's the key. If your system works and you trade it mistake-free, you'll make money. So then going forward, the only thing you should be checking about yourself is, am I making a mistake? Doesn't matter if you win or lose money on the trade. That is not the point. It's, are you making a mistake? Because if you don't make mistakes and your system is a valid one, you will make money. Okay? Beth says, the advice, the trend is your friend, seems very simple and you don't understand it either. The one I know is the trend is your friend until the bend at the end. And what that basically means is, this is a trend. It's coming down. Why would you want to buy it? Trend is your friend. If it's going down, sell it. Sell it. Keep selling it until it bends at the end. And then this is telling you, right, we're not trending down anymore. And then this becomes your new friend. It's trending up, so you buy it. And that is, the trend is your friend until the bend at the end. And what causes most people to lose money is they don't understand this bend at the end, or they just have a system that they don't understand is a trending system, and then they try and trade it when everything's flat. As soon as things go flat, that's your bend at the end. Stop. If you've got a trending system, stop. If you've got a sideways system, up, down, then, channel system, implement that. Stop using your trend system. Simple. Any other questions? No? Great. You guys have been fantastic. If you'd like to give me some likes and thumbs up, if you enjoyed it, that would be much appreciated. And I shall see you on the next one. So tomorrow we're going to be doing checklists and routines, how to get into the habit of doing the right things at the right time every day. Okay. Thanks, everyone. See you later.